Prime Property, your weekly real estate reckoner. I'm Nayantara Rai. This week, we decode Budget 2016.
I propose to increase the limit of deduction in respect of rent paid under Section 80GG from rupees 24,000 per annum to rupees 60,000 per annum, which should provide relief to those who live in rented houses. For the first home buyers, I propose to give a deduction for an additional interest of rupees 50,000 per annum for loans up to 35 lakhs sanctioned during the next financial year, provided value of the house does not exceed 50 lakhs. I propose that any distribution made out of the income of the SPV by the REITs or the InvITs having specified shareholding will not be subject to the dividend distribution tax. It is proposed to exempt service tax on construction of affordable housing up to 60 square meters under any scheme of central or state government, including the PP scheme.
So there you go. Finance Minister Arun Jaitley has attempted to provide more liquidity to home buyers, one by increasing the HRA limit and second by hiking the home loan rebate. He's also tried to help out cash-tied builders by removing a tax anomaly, that's with respect to real estate investment trusts or REITs. Is this enough to rescue a battered property market? Let's decode Budget 2016 with Anuj Puri, the chairman and country head of JLL India, and Rohit Raj Modi, the vice president of CREDAI'S, an umbrella organization of builders. Thanks, gentlemen, for joining us here on CNBC TV 18. Before we go any further, let's get the ratings out of the way. I'm going to come to you first, Anuj Puri. How do you rate the union budget on a scale of 1 to 10?
So I'm going to rate it, Nayantara, on the basis of the real estate sector, and I would rate it at 7.5 or 8 on 10.
Okay. And Rohit, if I can now come to you, how are you going to rate Budget 2016 on a scale of 1 to 10?
So I would rate the budget 2016 with respect to real estate sector as 7 out of 10.
Okay, so we're getting 7.5 out of 10 and 7 out of 10 from the two panelists over here. Anuj Puri, let me come to you now. For the real estate sector, what would you say has been the most significant move? I would suspect that you're going to talk about real estate investment trusts.
So Nayantara, I was watching that budget very carefully, like everyone else, and right up to the 2/3 of the budget, there was no mention about real estate. And I thought, my God, this is going to be that one budget when there's going to be no mention of real estate. And then in a span of 10 minutes, there was sort of two very big bang announcements. Clearly the first one being on the REIT, that the dividend distribution tax is exempted. I mean, honestly, not many of us were expecting that to come in. It was an absolute bonanza, brought a lot of chairs. The room that I was sitting, there were a lot of other industrialists, and you could see a wow factor come in there because we did not expect. We had been asking this from the government for a long time because the announcement of REIT was made in May 2014 in the first budget of the government, but the DDT, the dividend distribution tax, was a thorn. And they have now taken it up. So clearly REIT is going to become a reality. There's about 230 million square feet, which over a period of time can bring in about $18 to $20 billion within the industry. So that was the first big bag announcement. And the second one, as we go into the show, perhaps I can dwell a little bit more, was really on the housing sector. And that's where the finance minister addressed supply, demand and pricing.
Anuj Puri, you've been engaging, I'm sure, with a lot of real estate clients, with a lot of private equity firms. What's your sense? How many players are serious about listing REITs? When do you think we're going to see the first listing?
So, I'm very optimistic that we'll be able to see the first listing within the financial year 2016-17. Nayantara, I clearly see a number of developers, a number of private equity funds who had been buying real estate over a long period of time and collecting core office assets on income yielding assets. They would be the first ones who would go. There are sort of a list of 18 to 20 potential developers stroke private equity funds who have REITable assets. There could be several of them who could go first. I mean, it may be inappropriate to take the names of those guys because that is their private decisions. But 18 to 20 of those would be in a position to go in to do the REIT. That's the first part. The second is there is an immense amount of interest from overseas investors. I mean, the yields in India are still very attractive. The rentals continue to go up. The occupiers on the office space are very credible. There is a shortage of good office supply, and demand on the other hand, given how the US economy continues to expand, outsourcing jobs continue to come into India, that is starting to prosper even more.
You're expecting only one REIT listing in the entire financial year?
Then there are at least one. I wouldn't say that that'll be the only one. My guess is, people will wait and watch to see what is the valuation that REIT listing gets on. So that's where I feel is that the others may just hold on because they would want to see what's the value that the first REIT listing gets. I would only put in one big caveat, and
what's your money on? Is it going to be Blackstone or DLF that's going to list the first REIT? What's your money on?
I have no idea. I mean, either of them are very capable. They are perhaps REIT ready for a long time, and my guess is, could be those, could be any of the other players within the industry.
Rohit Rajmodi, come in on this now. You just heard Anuj Puri, representing an international property consultant, saying that, perhaps the initial momentum is going to be very slow. Everyone's going to watch for the first REIT listing. But in the end, we can get about $18 to $20 billion of inflows. You representing the real estate developers, are you an enthused lot? The reason I ask you this is not because all developers that have run into balance sheet problems actually have great commercial real estate assets that they can REIT out. And secondly, let's be honest about it. As far as the property market goes, thanks to what's happening in China and China's property market, aren't global investors getting wary? Aren't you finding it more difficult to engage private equity firms, to engage global capital to come invest in India's property story?
I would not, put India and China in the same bracket because from the point of view of the penetration of commercial to GDP, India is nowhere close to China. So there is a huge appetite for the Indian commercial real estate asset globally. We have an increasing consumption demand in the economy. So I do agree with Anuj that yes, REIT is where we probably will see the maximum action which has been facilitated by this budget.
But that brings me back to the other question I asked you, that is not going to really benefit most of the developers that have balance sheet problems because they don't have the real estate assets that they can REIT out.
Sure. So you see the quality of real estate developers who hold grade A commercial asset which can be REITed out is really probably 18 to 20. I mean, not really more than that. But the investment that would bring in, the amount of capital that will get unblocked and would come in for supply would definitely help to propagate the agenda of the commercial office space demand in the country. But yes, I do agree that has got nothing to do with developers, the majority of developers who are essentially into housing segment. Obviously, REIT benefit has got nothing to do with it.
Liquidity troubles for the real estate developers is perhaps not going to end with the tax anomaly being cleared up in the budget as far as REITs go. Anuj Puri, you just heard Rohit Rajmodi concede that there are probably not more than 18 to 20 companies in India sitting on assets that they can actually REIT out and raise substantial capital. You're projecting $18 to $20 billion as inflows. Does that mean each one of them can raise $1 billion?
So, Nayantara, it wouldn't be each one of them can raise $1 billion. Some of them, for example, DLF has over 30 million square feet of portfolio. So, their ability to raise more than $1 billion is far greater than some of the others which will have a smaller commercial holding. So, I don't think it will be appropriate to average it out to say it's $1 billion. Somebody will have a potential of $4 or $5 billion. Others may have only about $200 million. And that $4 or $5 billion, Nayantara, it wouldn't be in one stroke that they're going to come out into the market. They may out of that come out with, say, $500 million listing and say, let's try it out, and then over a period of time we will continue to add assets into the REIT listing. If I can just add a little bit
But
more to
how
what Rohit...
competitive are we going to be, Anuj? How competitive are we going to be versus established markets for REITs? For example, a Hong Kong or a Singapore. Isn't it going to be very difficult? And the question I asked Rohit earlier, you know, you are seeing a flight of capital. People are wary that if you can see the kind of troubles you're seeing in Chinese property market, how is India any safer?
Yeah, and it's a very valid question, and I'm going to add what Rohit said. You know, so Nayanthara, you're not going to see foreign capital come in greenfield projects. That's exactly the answer to your question. There is nervousness. They are not going to come and invest in greenfield, whether it's housing or commercial or retail. What they are going to look at is rather a safer investment, which is really where this core office asset REIT listing is. There is no developer risk, there is no construction risk, there is no approval risk, there is no tenancy risk in that. This is an asset which is fully built up, fully leased, and you're coming in for rental income. That's a safer product, and that's where you're going to see the money. That's first question. The second question is, you know, what returns are they going to expect? In my opinion, you know, it'll be anywhere between 7 to 8%. But it's a big but. The but that I say is that our lease rentals every quarter, you see, is going up by 1 to 3%. And the reason for that is we have very inadequate quality real estate supply on offices left. So 1 to 3% rental increase every quarter is what we have seen in the last now 3 quarters, and leading up to end of 2017, we see the same amount of growth. That's what they are going to be getting excited with, which is not yet
No, but this 7 to 8% return, Anuj, that you're talking about, how does that stack up against a Singapore or a Hong Kong?
So it's about the same. 7 to 8% is what you get in Hong Kong, 7 to 8% what you get in India. But in India, you are looking at a 1 to 3% rental growth every quarter, which is not what you're getting in Hong Kong and Singapore.
So that's the opportunity with REITs. Rental yields increasing by over 1% every quarter. Gentlemen, we have to take a short break, but stay right there. After the short commercial break, we're going to find out if Budget 2016 can uplift the battered housing sector. Stay tuned.